I mean, if you think about it, it's almost like building a home. We're not actually building the home, but the home shipping, it doesn't have a foundation. It doesn't have, you've got to hook up all the utilities. You've got to build a foundation for it to put it on and all that sort of stuff. And so it's a little bit like home development. Not totally. Like I've done some of that, but it's got a lot of the aspects of it. And that was a big learning for me.
Welcome to the Real Estate Mogul MD podcast. Thanks for tuning in and taking control of your financial future. This is a show where we not only motivate and inspire, we give you actionable real-world experience to help you live life by design. You'll hear journeys and stories from other physicians, investors, coaches, consultants, and entrepreneurs. And now, here's your host, Brett Riggins. Today's guest is a private equity real estate fund manager with more than $300 million assets under management and the founder of the Saratoga Group. Now, he started building his real estate investment career on single-family homes. Actually, before that, he started his professional career as an engineer and in the tech industry. But the little bug off the little purple book and the single-family homes quickly led into mobile home communities. And his journey started out in California, now back this way in the Sun Belt in the middle of America as well too. And now, wow, what a journey it has been, sharing all of the mobile home magic with us, not only making the numbers work for investments, but changing lives along the way. So many cool stories here. Everybody, please welcome Sam Hales to the show. All right, Sam, welcome to the show. Thank you for your time. And for the listeners who can't see, what in the world is that piece of machinery behind you?
Well, let's see. On this side, that is my inversion table that I hang upside down because I have kind of a stiff back, and then I think there's some dumbbells on the other side.
Wow.
So this is my home office slash gym.
So being just an absolute powerhouse in real estate, I thought there was some special way that you invest in deals. Maybe you hang upside down and invest in real estate deals, huh?
Well, that would probably help because like all the blood would rush to your head, right? Should help you think clearer. I haven't tried to do work that way, but yeah, maybe there might be something to that.
Love it. I love it. So Sam, we are here on the Real Estate Mogul MD, and I love this show because there just goes everywhere. We're talking about real estate. We'll talk about mindset, coaching, entrepreneurship, all kinds of stuff. And today, man, it's a privilege to have you on the show. And I want to talk specifically about the type of real estate investing that you do, because you are not a physician. You are a real estate investor. And the interesting part, you actually see that you have a degree in chemical engineering, and then into a master's into finance. So it's funny now you invest in real estate, right?
Who knew? Right? I mean, isn't that life, like the circuitous journey that it takes us on? But I was actually pre-med, funny enough. My dad's a surgeon. Definitely wanted me to go into medicine. But no, I'm happy kind of, what I'm doing, I suppose, but it's been a journey and yeah, started out in engineering, started out in tech and got into real estate full time about 13 years ago.
Yeah. So tell us a little bit about that journey. So you started off probably alongside of what you went to school for, but what was the introduction for you into real estate?
I think it was similar to what happens to a lot of people that I meet that are real estate entrepreneurs is they caught the bug, right? Like for me, it was buying my first house. I think that's a somewhat typical thing. And I knew enough. I was very interested in investment generally and had done other investing. And I knew enough that, hey, I'm looking for an opportunity when I buy my first home. It was not long after I graduated from college and we bought a home that we were basically the second owners. It had been built in like the 1950s and it had old shag carpet, and we pulled it up and refinished the floors. And I mean, I was swinging a hammer and doing all the work, actually my wife and I, and we were able to kind of leverage that when we sold it and make for us a meaningful amount of money, and then kind of leverage that and start buying other real estate. So I was kind of doing that on the side as I was in technology in the San Francisco Bay Area. and would buy a single family property here and there, and kind of wash, rinse, repeat there for a few years.
So single family starting, and then when was what was the change? What was the progression to? Are you still in single family, or what was the progression out of that?
Yeah. I didn't make the change as soon as I should have. Let me put it that way. There's a lot of inefficiency in single family investment. I mean, of course, there's huge corporations now that backed by Blackstone and other large private equity and hedge funds that are trying to make they're making a business out of single family home investment. But the issue is for smaller players, you're buying a home here and then you've got another home that's 5 miles away, and just the inefficiency of kind of trying to service all of these roofs, we would call them, that are all separated by a lot of distance and different situations and neighborhoods and all the rest of the things that go into that. So I did that for a number of years. I started to move a little bit more into like land entitlement and development, but was really looking for something that, again, I could have some efficiency in, but also I'm pretty risk averse, and something that I felt like would do well in down cycles as well as bull markets. And a lot of reading, listening, and kind of researching led me to mobile home parks. So we bought our first one in 2017, and since then, that's all that Saratoga Group has purchased, and we've almost sold off all of our single family homes. We got a handful left, but pretty much sold off that portfolio.
Very, very interesting. And the inefficiency in single family homes, what are some of the things? Now, this is it's a guess. And
okay.
What are some of the things that you think that the bigger funds are doing to decrease the inefficiencies, to increase the efficiencies in single family homes?
So yeah, the first thing that I got to know some of these groups pretty well, but they've devoted a lot of capital and a lot of expertise to creating platforms and automating, anything from the underwriting to like exactly what needs to happen when you renovate a home and what doesn't need to happen, and making that process super efficient. The thing that I think we're seeing the most now from them is they're doing these BTR or build to rent communities. So they're either building them themselves or they're partnering with Pulte Homes or somebody like that who's going to go build a big subdivision. And instead of selling off those homes, which is what a home builder has always traditionally done, they're basically turning it over or selling it to, Blackstone or whoever that's now got 250 homes all in the same neighborhood. So you get those efficiencies. It's not quite as efficient as like an apartment complex, but there's a lot more people that are looking for single family home rentals than there used to be. As you know, there's kind of that growing divide between the cost of home ownership and then renting. And so these build to rent communities, which in a sense is what we're doing in mobile home communities, it's kind of the lower end of that same piece of pie is the mobile home communities or manufactured home communities.
Now, this journey into mobile homes and then acquiring the park. So tell us a little bit about your first mobile home deal.
Yeah, first one we bought is actually the only one that we've sold. So our thesis is there's not a better risk-adjusted investment that I've found than mobile home communities, and they outperform over time as well. So our thesis is we don't want to sell them. That being said, we've sold one. It was the first one we bought. It was in California. I now live in Tennessee, and I don't want to own anything else in California, basically. So we don't need to go down that rabbit hole. But anyway, so that community in some ways violated some of the things you want to avoid, especially on your first deal. It had a lagoon, meaning private sewage system. It had a private well. Those are all kind of risky sorts of propositions. I knew something about that because I lived kind of out in the country a little bit. We were on a well, we were on a septic, and engineering background. I mean, I was kind of familiar with like what the gotchas were or whatever. But anyway, so that was 60 spaces. We candidly, I mean, we made money when we sold, but it was, I think, because of it being in California and just some of the restrictions around, well, all sorts of things, like very difficult to move a new home in, very difficult to do a number of those different things that made it, I think, our return on that not nearly as good as kind of what we've experienced in other markets. But I'll tell you, all that being said, within 3 months of buying that, we completely stopped every other real estate endeavor we had, kind of pursuing other endeavors, and went all in on mobile home parks, and quickly started building up a portfolio on that.
And generally speaking, not going down the rabbit hole, but generally speaking, I hear this question a lot. When we have a few specific markets that we invest in, and I get the question a lot, hey, why there? And if you could just, not wanting to own real estate in California, what were some of the general pieces of that, just on a general level, not down into the weeds of it?
Yeah, I mean, I think to start generally, in California, I don't know that you actually own your real estate, to be totally frank, because at any moment, some rules can change that make your ownership or your rights of ownership, put them in peril and in jeopardy. And so it's kind of baffling to me, like some of the things that have happened. I mean, COVID is obviously an example of that, but we had a portfolio, and fortunately it was a lot smaller than 5-10 years ago, but going into COVID, and it was very difficult to convince somebody to pay their rent, because they're like, what are you going to do about it?
Right.
I mean, have a hard time enforcing, collecting rent, stuff like that. So, and obviously that went on kind of across the country to some degree, but it recovered very quickly in most states that we have mobile home parks in, like Georgia and Alabama and the Carolinas and Tennessee and throughout the Midwest, which are kind of the markets where we own mobile home communities.
So I'm here in like the Sun Belt area for the acquisitions, and a lot of the time, Sam, the way that we've looked at things, kind of like the outside in approach, when we look at investing of, hey, if I look at the entire United States, say, what if I were to own something somewhere here? One of the easiest ways sometimes to help you find the right spot could even be the color of the state, and what color politically you believe, don't believe. Beside all of that rabbit hole, those colors of those states are sometimes a telltale sign of whether or not you want to own real estate in those particular locations. Do you feel the same way?
In a word, yes, or absolutely.
Yeah.
Yeah. It's just, we're in a space where it would be easy to, I would say, to take advantage of our residents. And let me explain that a little bit. If you think about the cross section of a typical resident in a mobile home community, they probably own their own home. Most of them do. They probably have it paid off. They don't have a payment on it. They own it outright. And so their monthly allotment towards housing is the lot rent that they pay to use as the owner of the community. And because their home is there, and it's quite expensive to move it. I mean, today it's probably $15,000 to $25,000 to tear it down, hook it up to a truck that'll tow it and is licensed to do it, set it up again, put a new deck, you know what I mean? All that sort of stuff. And in a sense, that resident is a little bit stuck, not totally, but a little bit, because if you raise the rent $100 instead of maybe something more appropriate, like $35, is that extra $65 enough to convince them that, oh, you know what, for 65 more bucks, I'm going to pull my home out of here and pay $20,000.
Right.
Like they're probably not going to do that. And anyway, I just make that point because we're sensitive to that, and we don't want to make living in our community a hardship. We do increase rent every year, but that's part of being a responsible owner. I mean, that's kind of what happens in the market and what happens in our society and economy. But we also don't ever want to take advantage of their situation. But we want to be able to do that of our own free will and choice, and not have it mandated by some sort of government entity that thinks they know better, and is actually going to make it less in it. Right. I mean, rent control, I mean, that's a great example, but that's part of the thing that we have to think about. If we're in a place where there is rent control, there's all sorts of studies. I mean, economists, red, blue, and purple will all tell you, like 93% of economists will tell you that if you implement rent control, it is bad for affordable housing.
Mm-hmm.
And it makes it less available and it drives quality down, because then the landlord doesn't have an incentive to improve the quality. We'd rather invest in these communities, do new playgrounds, pave the roads, bring in new houses to make it a better place to live, and be able to reap the reward of the people choosing to live in our community because we offer a good, safe, and clean place to live.
Yeah, I think I had a guest on was speaking of actually RV parks, some kind of thing, but they owned real estate in the New York, I believe New York, New Jersey area, and they refused to invest in New York anymore because in a certain area there was a law basically passed that says, hey, if you have properties here built before this timeline, before this specific date, you can only raise the rent by 1% each year. And that basically it takes your right away as a property owner, because what are you going to do? I'm buying this in a value add scenario. And now you're telling me I can't raise rent because I'm improving the building. I'm paying taxes on the material. I'm providing jobs, all of this stuff, providing better quality homes. And then I can't raise the rent. It takes the right out of you. But
it does. It absolutely does. Yeah.
And that again follows the red and blue state thing. New York being a blue state, so very interesting. I took heat in this when I first started my first house. I remember I was I kind of like baby faced, and I learned a lot of things what not to do in this one, Sam, as we all did, right? But I had a tenant in this house that wasn't paying rent. So I had to go to small claims court. So here I am trying to figure things out. I didn't know the process to screen tenants or, to do anything really. And the way I was treated as a property owner in court blew my mind, absolutely blew my mind. Like I had done something wrong. It's just so fascinating.
Demonized.
100%. And I just, as a younger kid, I was like, I don't know why I'm being treated like this. I had no idea. This person signed a lease agreement and they have not paid the money. So what's even the conversation here?
How did I become the bad guy?
Yeah. So
and that was the thing, like in California, we would go to try to, an example. We had a small multifamily property, and it was in a nice urban location with the opportunity to expand it. And, going to talk to the neighbors and then to, get in front of the city, and we were demonized. We were absolutely, and it was like, it's just not fun being portrayed as a bad guy. It's like, all we're trying to do here is, you guys told us you need more housing. Like, that's what we're trying to do. Why am I getting called names and like run out of town? It like made no sense to me. Whereas we, at the same time, we were building up our mobile home park business, and we'd go to, Greenville, North Carolina, and they are rolling out the red carpet, so grateful that somebody chose to come to their community, invest millions of dollars to make more affordable housing. They were grateful for it. And it's like, nobody likes getting treated like they're a bad guy. Like it just, so the economic stuff aside, it's like, man, I just would rather do business in a place where they want you to invest your money versus feeling like a bad guy all the time.
It's perspective. And when we first start talking about or looking at investing and, separating our time from money, it's like we have to make this mindset shift. And the way that, we've been conditioned to feel about money and all of these different things, but everybody else on the other side of either the table, the street, or whatever it is, in whatever situation, if you own property, if you are a developer, if you are an investor, you are rich, wealthy, and you're there to take advantage of people. This is this conditioned perspective piece that's across the board, but it's such a double-edged sword because this is also the situations where you can create affordable housing. So, so it's just crazy. And then, so we're talking about perspective and politics. Wow. What a horrible combination. Well, let's get out of this conversation.
How did we get here, bro? Yeah.
Yeah, right. No, but in general, mobile home parks, very interesting. And then yes, the affordable living piece. And we have a nationwide real estate acquisition company. A lot of times being direct to seller, we're connected with people in some of the worst times of their lives. And multiple times I remember creating a scenario, a lot of times, even like a divorce situation. There's no money. Maybe somehow they've bought this $40,000 house and now it was crap, air quotes. It was crap when they bought it. It's worse crap now. So there's not a lot of money there and they have to move. They have to separate. The mobile homes really create these opportunities or scenarios where you can go and have your own place with minimal amounts of money. So it was just, I know in multiple scenarios, we've had that situation where, they were able to acquire their next place, move to their next place. And it's just a great spot. And I had spoken with someone about a month ago who's doing the same thing in California, providing affordable homes. But man, the cost of trailers it was San Jose, California. Holy cow.
Oh, wow.
Like $350,000.
I used to live in San Diego. Oh, yeah. Yeah.
Crazy.
Yeah. Well, it's interesting because sometimes what you're paying for there, if you think about it, that home was probably produced down in the Central Valley of California. It might cost a little more to build that there than it does in Alabama, but not that much more, really not that much more. But it's selling for 5 times what it would in Alabama. And the reason for that is that people aren't just buying that home. What they're buying is the right to pay under market rates to live in that community because of the rent control. Mm-hmm. The landlord of that community is not able to charge what the market actually demands. And that's why they can sell those homes for so much money.
Yeah, it's crazy. It's crazy. But the opportunities there, especially, back in the Midwest, Sun Belt, where you're reducing, I guess, increasing the affordability of not only mobile homes, but homes in general. So that we hit this criteria for our investment objective in ordering, saying, hey, I'm going to put this much money in. I expect to have this much money out. And then this is not something that's new for you. I see that you are private equity real estate fund manager with 300 million assets under management. So this is not new for you. You're very experienced in this journey of having these perspectives, the laying out the you're not welcome here, Matt, in some areas, and then laying out the mat of, hey, thank you. What's been the hardest part of this asset class for you?
That's a really good question. I actually have not been asked that question. I would say and I'm just going to talk about the operational side of it, I think, because the thing that surprised me is how difficult it is to fill up a community. So basically, we're typically buying a community that's maybe 60% occupied. So there's 40% vacancy. I mean, if I was buying apartment buildings that were 60% occupied, I think you and I would look at each other like, you're either crazy or you do not know what you're doing, because
Yeah.
if nobody wants to live there, like, does it need to be torn down? Is it like in some area where there's no jobs, or what's going on? But I mean, we buy communities like this in Atlanta, Georgia. I mean, in, great markets. It's just that in order to fill up that community, you have to have the capital and the financing relationships to be able to bring new homes in. A typical home right now that we're buying is probably $45,000 to $55,000, and then it's going to be another $25,000, like we were talking about before, to ship it and to set it up and skirt it and put decks on it. And so all in, you might be in the, and we could sometimes get it done for less, but we might be in the $60,000 to $70,000 range. If you're paying cash for that out of pocket, you can imagine, you buy a 100-unit community, 40 spaces, let's call it $50,000. I mean, you're into that millions of dollars to kind of fill up that community. And so it's and even the financing. So we now have lines of credit with banks and that sort of thing to be able to pay for the homes. But I mean, if you think about it, it's almost like building a home. We're not actually building the home, but the home shipping, it doesn't have a foundation. It doesn't have, you've got to hook up all the utilities. You've got to build a foundation for it to put it on and all that sort of stuff. And so it's a little bit like home development. Not totally. Like I've done some of that, but it's got a lot of the aspects of it. And that was a big learning for me. And definitely it's, so you go and you get all that done, then you got to sell the home. And sometimes that's not as easy with a new home. If we could source used homes and do that at half the price, which we haven't been able to do in the past, but is now starting to happen. There's the pool of applicants, of people that can make that monthly payment when the house payment part of it is cut in half, grows exponentially. Like there's just so many people that are looking for an affordable place to live, but they can't afford even the new home in a manufactured home community. So anyway, that's the hardest part for sure, is just kind of infilling these communities.
Filling them. And then when you bring that same model home in and you have it set, is your site manager basically the salesperson then at that point?
Yeah, that's right. So we've got a community manager, and they're the ones selling the homes as well.
And because of the type of, it's basically personal property, right? So you're not able to list it on the MLS?
It's interesting. So you can list it on the MLS, and we're actually using a service that does that. We're actually kind of trying it out right now, but most of the buyers that we find through Facebook Marketplace.
Nice. Very cool.
That's been
helping the info. Yeah. And then when you acquire places, do you, instead of just having the vacant lots, do you acquire them with vacant units on them as well too?
We do. Yeah. So another characteristic of the communities that we buy is there's often a lot of what we call park-owned homes, meaning most of the sellers that we buy from are either somebody that developed it 30 years ago, or maybe their kid who inherited it. And for whatever reason, there's this, in their minds, the way to run a mobile home park is you own all the homes, because you're going to get more rent if you're renting out the home plus the lot. And because of that, they'll artificially put more value on the home rent and less on the lot rent. So anyway, we just run into it over and over and over. But basically, we'll try to sell off those homes as quickly as possible, and we'll kind of swap it. So it's like if the total payment was $750 and $250 was the home rent and $500 was the $250 was the lot rent and $500 was the home rent, then we're going to kind of swap that. I mean, not, maybe not $500 on the lot rent, but $450 or $400, and kind of put more towards the lot rent, and then sell off those units, just because you get a better community when people own their own home, and just the repairs and the turnover costs, you get somebody that's going to stay in their home for a much longer time versus, just renting a home as well. And so your operational expenses go down significantly.
And the way that the law, not laws, but the regulations you lay out for your parks, do you allow homeowners to rent their houses out to other people? Are they to basically become investors and they can rent their house out to somebody else?
We've had that scenario in a handful of situations, but that is one of our rules: is you cannot sublet your home to somebody else. Because then you really start losing control of, who's in there, and are they engaging in, bad activities,
not taking care of
and it gets
not
taken care of. It gets super, super difficult to manage that. So we don't allow that.
And then when those regulations or rules, are those similar to like on a site condo scenario, we have to write bylaws? Is that similar to the structure of the mobile home parks?
Yeah, it depends on the state that you're operating in. So in some states like Florida, you have to what's called a prospectus. It does kind of lay all of that out. In other cases, it's simply, look, these are the rules and regulations of the park. You are going to sign this when you sign your lease to move into the community, and it'll say right in there, if you're not willing to abide by these rules and regs, then we have the ability to give you a notice to vacate, and we're either you can take your home with you, or maybe we'll buy it back, or you sell it to somebody else. But so it does depend on the state a little bit, but basically it's just, hey, this is kind of part of your lease contract, and there'll be a separate rules and regs that they're going to sign that part of it as well.
The industrial world of self-storage, one of the big benefits of that is the eviction process, right? The lockout, and then sweep, you're gone, put their stuff out. Very simple, nothing like having somebody leave their homestead, like where they're living. How does that work for mobile homes?
Oh, now we're getting nuanced. Brett. That can be right. No, you caught it there. That can be pretty complicated if somebody owns their own home and then they're not abiding by the rules and regs, or maybe they're not paying the rent, whatever, and they're then evicted, but they left their home. Well, now we got a situation, right? So again, this is state dependent, but depending on the state, there's just rules that laws that you have to follow, a process you have to follow, where you can file for an abandoned title. Because at that point, again, state specific, but there's going to be a certain amount of time that if they just leave their home there, then you can file for that. You can get title of the home and resell it. So
interesting, just like a car.
Yeah, just like a car. That's right. In fact, in a lot of states, or a number of states, the DMV handles mobile homes just like cars and other vehicles. So it's kind of interesting.
It's fascinating that it's still that way. It's very fascinating. If you could say some top points, some high points of why mobile home investing is good. What is your top three pros for investing in mobile homes?
Yeah, and Brett, would you mind on the first one? I'm going to compare it to self-storage. Okay, and the reason is because I think mobile home park investing and self-storage investing kind of get grouped in the same bucket sometimes, because it's like, hey, this is relatively recession resistant. Self-storage, it's like when there's hard times and people have to maybe move in together and share housing. It's like, well, they need that storage, and so traditionally it's done quite well. I would say the number one thing that advantage that I like of mobile home investing is that there is scarce supply, and it's very difficult to build new supply. So you've got like this very consistent, persistent demand, but it's extremely difficult to get a new community entitled and permitted to build just because of the stigma. And so you've got like a limited supply. And if you're one of the people that has that supply, you don't have to worry about another self-storage facility going in down the street or 2 miles away or anything else. Like the competition for mobile home parks is apartments and single family homes. It's almost in some ways not even other mobile home parks. Um, so I'd say that's number one. Number two would be it's very, very fragmented. So it is what self-storage was 10 years ago, or maybe even a little bit longer, where 90% is still owned by mom and pop owners, who aren't, typically they're very undercapitalized, but they're also under market for their rents. So they just kind of, it's like they're milking the cow, but they're never investing back into the community to make it a nicer community. And this would be, I would say on average, when we buy a mobile home park, the rent is in the $200 to $300 a month range. And every market we're in should be at least 400. And we're not gonna go from 200 to 400 overnight, but it's nice to have this runway that, it's like, oh, okay, over the next number of years, like the market is saying this should be $450 a month, and we're starting out at half of that. There's not many types of real estate you can buy that have those, right? I mean, if you buy a like apartment building, it's like, oh, well, market rent should be 1,800, but we're only charging 900. You're what? Like, why would you do that? But again, that happens all the time. So that would be, I'd say another thing. There'd be a lot of other things I could list as far as advantages, but maybe one that would be interesting for your audience is just some of the tax implications and tax advantages of mobile home parks is because if you're probably familiar with bonus depreciation, and of course that's getting phased out, but now it looks like, well, maybe it's back on the table and it's going to go back to 100%. Every improvement, unless you've got a clubhouse or something like that, but every other improvement in a mobile home community is eligible for bonus depreciation because it's all on a 15-year or less schedule. So it's pretty common that if we've got a mobile home park we're buying, that for an investor, their K1 that first year is going to be 100% of whatever they invested, sometimes more. So if they invest $100,000, they're going to get a K1 that says, well, it's not going to say congratulations, but it will say your $100,000 just turned into negative, right? It's like it's lost. But it's obviously from a tax perspective, you get to write it off completely in that first year. And of course, like I said, now we're at 80% and going to go to 60% next year unless this new legislation passes.
Yeah. Very, very interesting. And that in my mind is because it's more of the actual sticks and stones piece, why it's depreciated like that. It's not carpet and paint and stuff like that. It's literally the ground, the slabs, the concretes, the the water systems, all of that stuff. So very, very interesting. It's kind of like paralleling with car washes, because I think I don't know the specific time, but I'm pretty sure you can depreciate a lot of that right out front too.
I think so. Yeah.
Yeah. One of my limiting beliefs is if I wanted to jump into mobile home investing, because all these things are making sense, the supply and demand piece, the low rents, the mom and pop owners, all of these things are awesome. And speaking of that, it seems like they would correlate with self-storage because you don't have anywhere to store things. In the self-storage world, if you look for places that don't have basements, well, you're putting in lots of places that don't have basements. So they need to store stuff somewhere. There could be a correlation between the two. But what is it that allowed you to make the jump? Because my mental block would be, I don't know anybody who can manage this. And let me tell you what, the stigma that's around. I've lived in mobile home parks multiple times in my life. The stigma is there 100%. Right or wrong, it is true sometimes. And not only I don't want to fix toilets and chase rent, but I don't want to deal with the people who have given the stigma, right? I don't want to deal with any of that. How did you get across like, for me, it's a mind block. How in the world do I find a manager to manage a mobile home park?
that's a great insight, and I think it goes back to that adage of not asking a manager to do anything you're not willing to do yourself. And so I don't want to say I went in with eyes wide open, because there were certainly things I didn't understand about the space, but I understood exactly what you're talking about, which is, okay, this is affordable housing. I had done other things in affordable housing, but I knew that enforcing rules and regs, collecting rent, and some of the issues we were going to encounter are not the same issues as if you have an office building and you've got professional tenants, right?
Mm-hmm.
And so that, to me, I didn't mind that. Like to me, that didn't that didn't bother me too much. And it's in some ways, that's actually, if you think about the flip side of that, you think about these families and the kids that live in these communities. And Brett, maybe I'm going to just share something that we talk about internally. We don't talk about it too much on the outside, but we have something we call the bus test, which is the following. If we drive up to one of our communities and kids are either getting on the bus or getting off the bus, and they look a little sheepish and they look maybe embarrassed to be there and to be going home, like, we just failed the bus test.
Mm-hmm.
But instead, if we've repaved the roads and we put in a children's playground and we maybe put in a bus stop for them, and they get off and they're jumping on their bikes or they're riding their scooters or their skateboards, and it's like they're not ashamed to live where they live, then we pass the bus test.
Yeah.
And so, for nobody gets to choose the situation that they're born into. And so anyway, we've done other initiatives kind of around that, like a little libraries where we'll put in books in English and Spanish. And some of them are like, you're hoping a 12-year-old young kid picks up this Rich Dad, Poor Dad book and they read it and it changes their life. It's like something they never would have come across in their circle of influence, in the friends or family and the associations they have. But it just so happened that thing was sitting in a little shared library that's in the community, and they read it and it changed their life. So I don't know. I mean, I guess what I'm trying to say is, you're right. There's those issues and those stigmas and those challenges, and we try to have fun with that. There's some stories that we're going to write a book just with some of the experiences we've had. But the other side of that is, like, it is super cool to see some of the ways that, like, our managers reach out, involve the community, and bring doctors in that are going to give free health checks, and just these different outreach that, again, if we just had professional clients in an office building, like, they don't need that.
Right.
But these guys can use it.
That's awesome. So it is, again, back to perspective. It's either a problem or an opportunity. And if you can have your numbers right as an investor to provide those little things that make a difference, you could be shaping and changing lives, So fascinating. It sounded like, speaking of the bus check, it sounded like the bus just stopped at your house, because I see I hear the doggies barking there.
I think that's my kids playing with her out there. Yeah.
Yeah, right. Well, I just have one more question for you, Sam. It's been a great conversation. If you could go back 15 years and you were set beside somebody, maybe just beginning in the mobile home investment world, and maybe had the same goals as you did then, what would you tell that person?
So you're saying somebody, just kind of talking to myself maybe 15 years ago.
Yeah, and I like to rephrase this question. I want it to be somebody else, not you, because we're all on our own journeys and have our own stack of experiences, and I wouldn't want you to change anything that you've done. What could you suggest or tell somebody, now that you have this 15 years of experience in the mobile home industry? What would you tell that person who's considering it?
Yeah. I would say that start looking in your local area, unless you live in California or New York. Start. We had to get that in. Start looking in your local area, something that you can like roll up your sleeves, get your hands dirty. You can own it, manage it yourself, understand it. Because then if you decide to continue on in the business and to grow and build a business, you're gonna need to hire other people to do those things for you, but you want to make sure that you can understand really what it's like and what it takes and what's needed. So I would just say, yeah, find a community that you can own and operate yourself, even if you don't want to do it for very long or for more than 6 or 12 months or whatever, but just to get that experience, and then kind of go from there, see if it's for you, because it's about people. It really is. And so to your point before, it's like you've got to make sure that you have a perspective where you can understand the people that are living in your community and what it means to them to have a decent and affordable place to live.
Yeah, it's awesome. And just, I mean, that is the mobile park magic, I think, is understanding that it's about the people. And if you can create the investment with the same perspective of it being about the people, make the numbers work and provide, I mean, it's a win-win situation.
It is. Yeah, that's what we say. Like if we're doing our job and making it safe and making it clean and making a nice place to live, everything else takes care of itself. Like right. It doesn't take that much money in a mobile home community. I mean, $200,000 in roads, like that goes a long ways, and you can really change a community with not that much capital, and you'll get a great return on your investment because you're making it a better place to live.
Amazing. Well, thanks again for your time. Hey, what question didn't we talk about?
I've really enjoyed the conversation, Brett. I can't think of, no, I mean, I really enjoyed it. I really enjoyed the conversation. I can't think of anything that we didn't hit on.
I love it. I love it. Well, it's been a great conversation. I'm sure the listeners have got tons of value, and I know that there's some listeners out there who have heard of this thing called the mobile park investing. So this is just so much value that you've given to them through your experience, through your struggles, through your wins. So thank you so much.
Yeah, Brett, thank you.
And for the listeners out there, you can reach Sam on LinkedIn or even at saratogagroup.com, Saratogagroup.com. I'm becoming the world's greatest speller when I have it in front of me, telling the listeners how to find these things. But reach out to Sam if you have any interest learning more about mobile home parks, more about his journey, and I think just connecting the investment with the people and remembering what it's there for, because you can create win-win situations where the numbers work and you could be changing lives at the same time. It gives me goosebumps to think that there is a library for free, a shared library where a little kid could pick up on these things that you and I are so blessed to talk about on these podcasts, and the listeners that you and I are so blessed to come across because of our network, our experiences, our resources, and you can provide these things. So make the numbers work, make the life experience work too for the people that you're working with. If you have any questions for us, shoot us an email, info@physicianwellsystems.com. If you want to complain about any things we said today, whether it's a red, blue state or blue state, come on, email me too. We'll catch you on the next time. Thank you again for your time and, more importantly, your attention. This is the Real Estate Mogul MD.